Good morning. My name is Vladimir Tikhomirov. I'm chief economist at BCS Global Markets, and I'll give you my outlook in the macro area for the coming week. To start with, I would note that the big development of the past week for the Russian market has been quite significant weakening of the Russian national currency, the ruble. Ruble is trading currently at around 74 to 75 rubles to the dollar. This level, in my view, is not fundamentally supported because of fairly comfortable oil price levels at around $43 per barrel and relatively low geopolitical risk. I believe that the major factor that led to ruble weakening were sales of Russian government bonds by foreigners. This is OFZ. The sales were triggered by central bank action after this fairly aggressive rate adjustments that we've seen from the Russian central bank. Basically, that left the potential for further appreciation of the bonds very, very small, and perhaps that could have triggered some of the investors to take their money. This prompted a rising demand for effects on the domestic market. Another traditional and seasonal factor is the dividends that are paid out by Russian companies during the period of July, August, which part of these dividends are received by foreigners who convert them into FX and take them out. So that also increases the pressure on the ruble. This, in my view, were the two major factors that led to ruble depreciation. Although, as I mentioned, I don't think that the current level is fundamentally proven. Basically, I would say that ruble fair value is somewhere around 71 rubles to the dollar, given the oil, given the risks. So once we've seen this wave of FX buying from foreigners going down, I believe chances are that ruble can actually start to appreciate. I don't rule out that basically this could happen even this week. So in the next at least 1 or 2 weeks, I think that there is a potential for some ruble appreciation. Although having said that, I should perhaps mention that we're in August, and August traditionally is fairly weak month for the Russian market. There is a history behind it. There is a seasonal factor, low level of volumes at the market because of the peak of the holiday season. And of course, oil price moves. Basically, the OPEC Plus deal, the last deal that was reached, which would lead to some increase in supply of oil, could actually put more pressures on the oil price. So this is a potentially a risk for the ruble. Another development of the past week that is going to be to continue outfolding this week and in the next few weeks is the sanctions saga. Last week, U.S. administration announced that they want to include Gazprom two major pipelines. This is the Nord Stream 2 project and the Turkish Stream project under the scope of the law that basically restricts or the cuts a law which basically counters actions taken by adversaries against the US, and this potentially could lead to sanctions. Although concrete sanctions were not yet announced by the US administration, I would not be surprised this news coming out in the next few days, perhaps a couple of weeks. Parallel to that, we have seen the sanction saga again against the Nord Stream 2 project being developed in the Congress, although because of the recess of the Congress, the likelihood is that the new defense budget, which contains these sanctions, is going to be approved only in September. So there will be some delay on the Congress side. Although the sanctions against the Nord Stream 2 project are no news, they have been discussed for a while. This is potentially a negative factor for the Russian market and the ruble. That could happen, as I mentioned, perhaps within the next few days. Apart from that, the big developments or the big development for the global markets, including the Russian market, has been and still is the relationship between US and China. We have seen quite significant escalation of tensions between the two countries over the past few weeks, and the chances are that this escalation could continue. Of course, this is a very negative driver for the global markets, particularly for the more risky assets like emerging markets, of which Russia is a part. So this is a development that could actually also trigger outflows of investor funds or investor capital from the Russian market. So we'll be watching all these developments. One other thing that I perhaps should mention is that in the coming week, on the 6th of August, Russian Statistical Office is going to release inflation data for July that should show increase in inflation to 3.4% year on year. Moreover, actually, I expect inflation pressures to continue to build up in August as well, which could mean that the potential for new rate cuts from the central bank is going to get even more limited. I actually don't expect the central bank to change rate this year anymore. That's all on my side. Thank you.